The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the last 2 weeks of the year edition of TFNN. We're going to take a quick look here at the DAX index. As you can see, it is having trouble making up its spine, folks. It can go either way. From had a little bit of a gap up and then a pull back down, and now it's starting to fade a little bit, similar to what we're seeing in futures here in S&P and some of the others. If we take a look at the DAX index, we've already done that. Let's look at the FTSE. If we take a look at the FTSE here, you notice that we had a nice move up and then a pull back down here today, holding the 61% retracement. So it's very important that we're holding these levels relatively well. Let me see if I can turn up the sound here and make it just a little clearer, but we'll see here whether we can do this or not. Make it a little better. Hopefully that'll be a little bit better on the sound, because it's maybe I should talk a little louder too. That could possibly be it. So we'll see what's going on here. All right, this is good. Okay, now let's take a look at where we are tonight, folks. We've got a lot of things happening that I focused on in the newsletter. The main problem that we're having in the market here, of course, is this banking index. This is the real problem, and that's where we're standing here. We're going to open lower here today because of the Goldman Sachs news that they have been caught cheating, or at least accused of cheating. If anybody could believe Goldman Sachs would be cheating, holy moly guacamole, that would be some news event in itself. But anyway, you'll see here that a little bit lower here at the banking index down here around 85.50, there is an ABCD pattern that should be very, very interesting. Also, if you'll take time today and just look at the FANG stocks, because they're not looking nearly as bad as the rest of the market. They look bad on the way down, but now they're not looking nearly as bad. They're finding some support here that looks very, very interesting. The key here, in my opinion, of course, this is my opinion. Let's just get this up here, and I'll try to give you my 2 cents worth of what I'm watching here. Okay, here's what we're looking at. This is the E-mini S&P. This is what a lot of people trade. It's about the third largest commodity that we trade. You'll notice here that we have several ABCD patterns that show 2480 as a potential bottom down here. Now that'll happen if 2570 doesn't hold, and I'll walk you through that from a technical perspective to see where we are. But that's certainly a possibility. The other indices, like the IWM, if you'll take a look at that, you know, it's forming a really nice 3-drive to a bottom pattern. But any little weakness today, you could see this thing really start to unwind. The key point, in my opinion, is that 2470 level. Let's try it again, Larry. 2570 level, and let me walk you through that to see what we're looking at here. Okay, here's where we were last night. I just wanted to get this up to let you folks see it. Over the past several days, you'll notice that the E-mini S&P, this is going back to the 12th of December, we've had 1, 2, 3, 4 20-point rallies. As we know, the harmonic number in the S&P is 5.5. You multiply that times 4. That gets you out to 4 harmonic numbers. And we just had one last night going exactly 20 points higher, and now we're coming down again. Now, if we extend this out just a little bit further from where we were last night, I'm going to bring this up so you folks can take a gander at it, whether you listen to it or not or believe in it. That's up to you, but it's certainly acting technically as well as we could expect. You notice that looking at these rallies, the last ABCD comes in, where do we say? 2570. That's the key level, folks. Below 2570 is lights out. And I don't just mean 2569. It's got to get probably 2560, something like that. And it's got to start accelerating. But acting normally on a technical basis. Whether it's going to bottom in here or not today will have to remain to be seen. Now, we do have David White will be my guest at the half-hour break. He's got some really great things that he talked to Tom O'Brien on Friday, and that was a really good thing. Now, folks, I'm gonna go off script here for just a little bit and share with you something that was shared with me by my good friend Rich Anderson. It's the last words of Steve Jobs in a letter that he wrote. Here it is. This is something we should really think about. I reached the pinnacle of success in the business world. In others' eyes, my life is an epitome of success. However, aside from work, I have little joy. In the end, wealth is only a fact of life that I'm accustomed to. At this moment, lying on the sick bed and recalling my whole life, I realize that all of the recognition and wealth that I took so much pride in have paled and become meaningless in the face of impending death. In the darkness, I look at the green lights from the life-supporting machines and hear the humming mechanical sounds. I can feel the breath of God, of death, drawing closer. Now I know when we have accumulated sufficient wealth to last our lifetime, we should pursue other matters that are unrelated to wealth. It should be something that is more important, perhaps relationships, perhaps art, perhaps a dream of younger days. Non-stopping pursuing of wealth will only turn a person to a twisted being, just like me. God gave us the senses to let us feel love and in everyone's heart, not the illusions brought on by wealth. The wealth I have won in my life I cannot bring with me. That's the true riches that will follow you, accompany you, giving you strength and light to go on. Love can travel 1,000 miles. Life has no limit. Go where you want to go, reach the height you want to reach. It's all in your heart and in your hands. What is the most expensive bed in the world? The sick bed. You can employ someone to drive the car for you, make money for you, but you cannot make someone to bear the sickness for you. Material things lost can be found, but there is one thing that can never be found when it is lost, and that is life. When a person goes into the operating room, he realizes that there is one book that he is yet to finish reading, the book of healthy life. Whatever stage in life we are right now, with time, we will face the day when the curtain comes down. Treasure love of your family, love of your spouse, and love of your friends. Treat yourself well. Cherish others. Steve Jobs. Folks, as most of you know here, that I'm a big believer and a big fan of Leonardo da Vinci, and his last letter was very, very similar to what Steve Jobs wrote. Da Vinci actually thought of himself as a failure, that he didn't really accomplish anything. And now we look at history, 250 years later. It's actually more than that. Yeah, about 500 years later, he actually was a pretty smart dude. Anyway, let's keep that in mind, because it's not the amount of money that you take with you, because you can't take any money with you. It's the good things that you can do for people while you're here on earth. And I want to thank everybody that helped with the gospel mission, with the socks and the underwear. We knocked our socks and underwear off with a really good donation for Thanksgiving, and God bless everyone that helped. It was really great. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I wanted to share a chart with you that was brought to our attention by Mr. TB over in LV, and I appreciate the work that he sends us. He's a really strong believer in technical analysis, and in addition to that, he's an incessant reader, so he has access to a lot of great stuff. Now, I'm going to bring this chart up so you can take a look at it. It is the chart of Lehman Brothers, and overlaid on top of that, which is the blue line, is Deutsche Bank. And as you can see here, we have a correlation here just a tad above 90%, and that looks like Lehman Brothers could be heading towards 5 cents a share, possibly. Now, I don't believe that Germany is going to let that bank go under, but it's in big trouble. And folks, we started this show about the banking index and how bad it looks, and that's where the real problems lie. Something is wrong in the banking section. This morning, they announced that Goldman Sachs was having trouble with Asia over some of the things they've done over there, so that stock is going to be opening lower. That'll pull down the banking index, and that'll be the key to what we're watching. So we're over an area where there should be a significant low, but that doesn't mean there's going to be one here. There could be the situation where we go down a great deal lower, much like we looked at in some of these other things. But if we look at the composite, the New York, the NASDAQ composite, if you'll take a look at this, you'll see that down about 150 points in the NASDAQ composite, we're going to reach a 3 drive to a bottom pattern. It's going to be absolutely perfect. And if you'll notice on the upside where we had the 135, if you flip that over, that's exactly the same pattern. Only the 135 pattern, you have lower highs, but in the 3 drive to a bottom pattern, you have lower lows. And as you remember, the 135 pattern was brought to my attention by Roy Longstreet and his son Bill. All I did was to show them that the relationships between 1, 3, and 3 and 5 were usually going to be 61% or 78% spot on, and they like that very, very much. And anyway, here's what we're looking at here. This is a possibility of what we're looking at as a potential bottom down in this area. Now, I know we're in the Christmas season, and you know, usually there's a Santa Claus rally, but sometimes Santa does not come to the streets of Broad and Wall. Sometimes he misses. So if we get below 2560 in that S&P today, that's down 30 handles from where we are right now. That would be another 300 points in the Dow Jones Industrial Average. That would tell us that we're most probably going to go a lot lower. Folks, we are in a bear market. The $64 question is whether this bear market is going to continue or just stop in this area right here. Now, we had a question from one of our listeners about the yield curve, and the yield curve is only part. The yield curve is, you know, when the short-term rates exceed the long-term rates, and when that happens, that's a very unusual situation. But we also have a situation with debt out there, and that's due to these high yield bonds, the junk bonds. And you've noticed that we completed that ABCD pattern here in the junk bonds. That's actually a positive thing that we should start to see a little bit of respite in the interest rates. But we had a little bit of a rally here about 3 weeks, but now looks like the rates are going to start going higher again. We're in a bear market, folks. We've been in a bear market in bonds for well over a year and a half. All we've seen recently is a bear market rally where rates, you know, backed off a little bit, but nothing has really changed very much. Remember, we were talking about the German Bund last week when it was topping there on the 6th of December when we first started to sell off, and you'll see here that we now have, you know, an ABCD structure that could come down a little bit lower, i.e. higher interest rates over the next several days. So you'll see if that's going to be the case. Anyway, we'll do these one at a time. Now, another chart that was given to us by our Mr. TB over there in Las Vegas is one I really enjoyed, and that is the chart of the Chinese stock market. And I wanted to just give you an idea of the timing on this, because the question has been pointed out that when Trump decided to run for presidency of the United States, that's when the Shanghai Composite started to top. And as you can see, it's had a tremendous break since that time. Whether it was due to Trump or not, nobody knows. But if you take a look at the next one, which is a little bit longer term chart, you'll see here that there's been a lot of things going on where this crash that we had in that Shanghai market, you know, really took the market down, and there has been very little recovery. And you'll notice here that somewhere around 2000 in this Shanghai should be some pretty good support. Now, whether this is going to mean very much or not on a longer term basis, I don't know. And whether it's related to politics or not, I don't know either. It's just a fact that the charts, you know, are very interesting. Oh, one of the questions someone's asking about the correlation between the Deutsche Bank and the Lehman Brothers. Folks, they were just banks that were having trouble. Why these things look so much alike remains to be seen. But if you would have spotted this 6 or 7 months ago, it would have been a really nice roadmap on the way down. Now, we didn't have that correlation, but we've certainly been watching Deutsche Bank go all the way down. Now, we did hit that 1.618 expansion down there at 858. I don't know where it's going to be trading yet this morning, but it's going to be probably below that. And if we get below $8, you know, like we mentioned before, the only other support comes in around $3 a share in Deutsche Bank, and I do not believe Germany is going to let that flagship bank go under. Just like, you know, we didn't think Lehman Brothers was going to go under, but if you remember, Hank Paulson from Goldman Sachs was our Secretary Treasurer, and their #1 competitor at Goldman Sachs was none other than Lehman Brothers, and I guess he felt it was imperative for let Lehman Brothers, you know, go to the woodshed as opposed to trying to hold it up. They did hold Bear Stearns up. They supported it at $3, but Lehman Brothers wasn't quite that lucky. Boy, some folks that were lucky on the street were the people at Barclays and some of the other banks, and also BlackRock, because they took so many of the key employees from Lehman Brothers into their companies when that happened. And I happen to know one young man who had been working for Lehman Brothers for 1 year, and when it went under, he thought he was going to be out of a job. And the day they let him go, BlackRock came in and said, "How would you like to come to work for us for 3 times what you're making at Lehman Brothers?" And Terry's job was in computers, of course, and he's made a great career since that time. A very nice young man. I've known his mother and father for many, many years. Now, one thing that happened last night, I want to get off the beaten path here for just a little bit because we were watching things unfold. But last night, I got a really nice email from our good friend at TFNN, Mr. Z, and John sent this chart to me on natural gas where he was looking for the bottom to come in at around 360. Folks, that's where the bottom came in. It was exactly 360.04 was the low in natural gas. It's trading around 368 right now. So, Mr. Z, hats off to you, my friend, because you were pretty much spot on. Now, Ruby's asking to take a look at the gasoline chart, and hopefully, I think I have it here somewhere. Here it is. I'll bring it up for you. It's got a chance, but slim.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have David White on the line. David, are you there?
I am here.
Hey, it's good to have you on. Folks, I don't know if you know who David is, but this guy really reads more than anybody I've ever met in my life and's got some great information. And I heard him Friday on Tom O'Brien's ending show. David, would you review with us what's happening with the reallocation and the NASDAQ and what it means?
Yeah, I got a little extra time over the weekend, too, to dig through this. The NASDAQ 100 is being rebalanced, which is nothing new. but most of the time it's fairly minor. This one's going to be bigger than anything back to April 5th of 2011. I thought it was 2009, but I went back and found it. But there's a lot of criteria to going into the NASDAQ 100. And there's what this one does, though, mostly because of the massive overweighting of the FANG stocks and a couple of other major stocks, is going to bring down a lot of the stocks that were 10, 12% of the NDX down to probably 7. So we're going to see a lot of these big stocks that move the market, Apple, NVIDIA, a lot of these things come down significantly. They already have because of the price, but they're going to become fairly low. At one time, 67% of the NDX resided in 6 stocks. There was only like 33% that had anything to do with the other 94 stocks. But one of the things that they want you to do is join their little club to get exactly what these all the levels are going to be, which is like $3,500 a month, and you have to be a market participant and a handful of other things. So they're not going to tell us exactly what these are going to be, but we do see the rules, and you can kind of reverse engineer it. And I spent some time on that this weekend. They did have a press release out over the weekend also, and that is which stocks are going to be going in and out. Joining the index is going to be Advanced Micro Devices, AMD, Lululemon, NetApp, United Continental Holdings, VeriSign, and Willis Towers Watson. Those guys are like an accounting group or something. I never really knew what they did. Leaving is going to be Express Scripts, Hologic, Curate Retail Group, which is one that is one of those retail groups that is bought out so many different ways that you don't really even know anymore what it does. It's got a lot of high-end or name brand kind of retail products, clothes. Seagate Technology, Shire, and Vodafone. So all those guys are going to be on the axe come Friday, and the ones that are going to be getting at least some new love are those AMD, Lululemon, Athletica, United Continental Holdings. You can't have a stock in there that is 0.1% of the index. So all those get scrapped. And then those get put back in to the next stock up that actually gets above that 0.1%, or the one that has the next market cap above that they put back in. But my big thesis here from looking through this and gleaning through what we do know is that we're probably going to see that once 67%, that's now about 48%, go to probably about 35%. So what we were used to was Apple driving the market higher. It will still be a big part of it, but it's probably going to have somewhere around the half the effect that it has on next Monday. Okay. So we are going to see probably a significant change in what I think is going to be volatility, because we're going to have a lot more stocks, a lot more varied than cell phone stocks, right?
That should be good for the market if it distributed better, but wouldn't you think?
Right, but at the same time, that's going to bring the amount that index swings down, right? So there's going to be lower volatility. So we are going to see something that's probably good for the market, but as traders, if we're looking for 100-point swings on the NDX during the day, and maybe that's more like 80 going forward, or 75. We're not going to see that I think we're not going to see that kind of volatility, and it's going to shrink. It certainly did in 2011 in the aftermath of that. When you had a lot of stocks that were $1 coming out of the bottom, and were on their on life support. When they got rid of those, I mean, a stock going from $1 to $2 is not unheard of. From 100 to 1,000, much less likely, probably takes 10 years. So, we're going to get rid of a ton of small companies. We're going to move up into some medium companies, and the big companies are not going to have near the effect that those had before. The actual regulation is if you sum all the companies that have overweights of 4.5%, that sum can't be over 48% of the total index of the 100 companies. And there are so many of them that are over 4.5% that we're going to see, like I said, I suspect that we're going to go from something like 11 or 12% to Apple to about 7%. Same kind of thing with NVIDIA. The big winners are going to be a handful of companies that didn't get hammered as bad, like Microsoft. So, Microsoft probably going to, continue to be maybe the strongest tech stock that we have in the marketplace. This is only going to help it as it gets a bigger percentage come Friday.
Sounds great, David. That's really good. I really appreciate all the information you give us here at TFNN, because I wasn't aware that this was going to happen, and since I follow that NASDAQ index quite a bit, this is going to make a big difference when I watch some of these stocks. And of course, those FANG stocks have, got hit pretty hard, but they're trying to hold bottom in here. What else do you have for us this morning? Something else that you wanted to share with us, because we chatted a little bit.
Yeah, I'm going to be doing a webinar on the 16th of January, and it's going to be about my first year with the that I've been publishing my sector oscillators in my newsletter. For those people not familiar with it or new or haven't heard of it before, I break down 24 of the individual sectors in the market and use a kind of a wisdom of a crowds approach. I don't know, you probably, well, I'm pretty sure you haven't, but if you took a statistics college class, one of the first things they do in the first year is put a giant glass jar like a gallon on the desk, and they throw as many marbles in it as they can, and they get everybody in the class to guess how many marbles are in the jar. And there's a kind of a magic number, and that's about 25. If you get about 25 people to guess, you'll have one bozo guess 1 and one guy guess 1,000,000. But overall, the mean's going to come in, and you're going to probably 25 people. You're going to be plus or minus about 5%, 95% of the time. So there is kind of a wisdom of crowds. I know we're going to go to break. We'll be back in a minute, I guess.
Hey, thanks. Stay with us, David.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back talking with David White of TFNN. David, you're going to be doing this webinar, is it this week?
No, the 16th of January.
Oh, 16th of January. Okay.
No, we got plenty of time. Yeah, it's in fact, I don't think we've even announced it on TFNN yet, but I just wanted to bring it up because a few of the things that I talk about are going to be I started putting it in the newsletter a year ago, at least the sector oscillators. But as I was saying before the break, one of the first things that you do in statistics class these days is learn about the wisdom of crowds. And I'd been talking to Basil about his 9-day moving average, and I kind of liked it. I'm not big on moving averages, but it did kind of match the ballistics of the market or the momentum of the market. And one of the ways that you can, I wanted to kind of put that wisdom of crowds technique to use in the markets was just how many stocks were over a 9-day moving average, how many are under. And just go ahead and make kind of a little oscillator that shows you exactly each individual index, where it is in its cycle from being oversold to being oversold and overbought in the marketplace, and where you could find incredibly good buys when everything's washed out and when everything's euphoric, when it's probably time to ring the bell. And so we're going to go back through the first year of that. I'm also going to be talking about some new techniques in machine learning, which gets us into our next segment here in a minute. But I've been working on identifying, in fact, I'm showing it on the screen now, identifying how many different kind of statistical candles there are in the market over the last year. I don't know if you're a big candlestick guy or not. I've never really heard you talk about it.
That's all. When you're old, the candlesticks are easy to count, and I like them because of the tweezers and stuff. So, yeah, I do like them. Yeah,
I like them for the same reason. One of the things that I was wondering is how do you actually quantify that and put it into some kind of mechanical or computerized system? And the first thing was, how many different candles are there? And so we're going to go back through that because I've been able to do that over a year significantly. So the next step is a thing called, in machine learning, it's called sequence identification. And it's basically doing the same thing we are, looking for patterns, but it is in a machine learning format. That is, machine learning is really good at learning things that humans can't program. So I've got some significant headway on that. We're going to talk about that on the 16th. But I'm showing a little toy that I made just to show off how many different candles there are statistically in the market. anyway, I know that it's a little slow. I'll do it a little slower. But you can group these into about 25 different groups. And there's a statistical model that shows that there literally are about 25 different patterns that you need to pay attention to that are significantly different in candlestick charts. And beyond that, they are pretty much statistically more noise than signal out there. So we're going to be talking about that a little bit. One of the things I did want to bring up too is you talk a lot about Bitcoin, and you got your friend from the UK. I'm drawing a blank on his name now.
John Jameson.
John Jameson. One of the other things I saw was that the biggest job growth in the last year in Silicon Valley and across tech land was Bitcoin, or not Bitcoin, but blockchain programmers. They surpassed the machine learning programmers this year. But at the same time, there's not one company that I know of that makes a significant amount of money with blockchain. And, you know, when we went into machine learning, which was big last year, and still makes a lot of money for people that use it, almost nobody that invented it made any of the money. And I wonder if that's not going to be the exact same model for blockchain. The big winners in machine learning were Amazon and their Amazon Web Services, with Azure for Microsoft. Google has their own system set up. But since the software is actually free, or the idea is free, and there's no patents, people really can't charge for it. They have to kind of give it away, and they give it away in the form of their cloud services. So I'm wondering, I haven't heard him really talk about it much, but I'm wondering, is this not going to be the exact same model that we saw in machine learning last year, which is, yeah, a lot of people use it and it's great, but is the real money just going to be in the distribution of it on cloud services, or is there a company that actually has some kind of magic in their programming to have blockchain actually become something like a company? You know, is there going to be another Microsoft out of it? In machine learning, there hasn't been. Everybody takes the papers right out of the college PhD box, writes the software themselves, and it all becomes instantly public domain. So I just thought it was interesting that, one, we have the number one amount of people piling into blockchain, and two, nobody actually making any money on it just yet. And this may be another one where we just have a huge amount of people getting in to the business, only to see Microsoft, Amazon, and the rest swoop in and make all the money on it.
That's what usually happens.
So
hey,
anyway, go ahead.
I just wanted to thank you for being on the show, and I'll certainly help promote that webinar on the 16th, because, David, you are one smart cookie, and I really appreciate the stuff that you post each morning, you know, which stocks are up, which stocks are down, and all the other posts that you have in there, because it's very, very helpful. And because, you know, I don't really follow any news at all, but you show the numbers that I like to see, and it's very, very helpful for me looking at it in the den. So I wanted to thank you, and I know other people are feeling the same way. So you're doing a great job. Just make sure you keep up the good work.
Well, I think I will. Don't have anything else to do.
Again. Tell us again when the webinar is going to be on January 16th. At what time?
I think it's going to be at 5. I don't think we've announced the time. Okay. But I did want to kind of talk about it because it's what I'm going to be working on during my vacation. I'll be back the 6th of January. I think back the 6th of January. I'll be leaving this Friday, so I'll be gone for a couple of weeks. But I'll be working on that and some other stuff. And, you know, so when we get vacations, it's always a time for me to try to upgrade whatever technology I have and learn some new things. Not why I'm in the trenches actually fighting, but when I have the ability to go out and clear my mind, go do some sailing and reading, and then come back and do a little bit of programming and add to it. But I think we've got some significant new tools to go after the market with, and that's what we're going to talk about on the 16th.
I'll be looking forward to it, and I'll be helping you. Oh, thanks a lot, David. Happy New Year and Merry Christmas to you.
You too.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, we're back, folks, and I posted the chart of the E-mini S&P that I brought out at the beginning of the show when we were trading at 25.98, I believe, and now you see we're down near that target that we were looking at 25.70, and so far the low has been 25.71.5, I believe, and 25.71 has been the low, so pay close attention to that. Also, be sure you remember that 10:30 is when the Fed usually comes in. We got that from our friend Mr. Shane Smolian from the Old Wolf Trader, and that stuff has been really good over the past. So watch that time frame. That's very, very interesting. Also, the price objectives that we've been looking at on some of these FANG stocks have already been met. I wanted to spend just a moment here on the yield curve, and this is a little bit over my pay grade, but you know, this is where the 10-year and the 1-year spread changes, and an inverted yield curve has predicted the last 7 recessions. The problem is, when you're looking at a recession, I'm looking at patterns that allow me to get in to out to not risk very much. And this chart does not do that for me. So I don't spend a lot of time on it. I don't watch it very much because I'm looking at the charts themselves. And as you know, I've been bearish bonds for a year and a half, and they've been going down, even though the Fed has been playing games. But that's neither here nor there. So that's the main reason why I don't do the yield curve. The second reason is I don't understand it. But the main reason is the timing of it. It just sucks. And I know that's not a good word, but that's, for me, that's what it looks like. With pattern recognition, you get really close to where you're supposed to be, you know, without very much of a risk. Look, well, today's a perfect example. Look at that E-mini S&P. We've been waiting for this all night, and here it is at 25.70. You can't get anybody to buy it. So we'll see what's happening here. Apple's actually up on the day, which is pretty good, and Applied Materials is up. There's some stocks that are up. Amazon's down about 3.8, and some of the others. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!